Most traders are blowing accounts, stressing over charts, and quitting after a few bad trades. But what if I told you you are losing money not because you're a bad trader, but because you are trading the wrong way? Today, I will show you exactly how I trade, why it works, and how you can finally stop losing money. If you are serious about trading and you know you really want to make money from trading, watch this video to the end. In this video, I'm not holding back. I'm telling you every secret you need to know. Let's be honest, guys. Let's be honest. Most traders jump into the market, especially the beginners. You jump into the market without no clear setup, no plan, and the worst of all, no risk management. I'm going to list out 4 key points, and if you fall into these 4 key points, then you need to redefine your strategy and you need to redefine your psychology. First of all, most beginners are trading multiple pairs without no focus. You trade GPUSD, you trade Euro USD, you trade USD CAD, you trade so many pairs without any focus. Secondly, most beginners are using too many indicators. Once you're using MACD, you'll be using RSI, you'll be using moving average, combining all of them together. You are confusing yourself. The third one, most traders are entering the market randomly based on emotions. Because you see the market moving, then you start stacking in your positions without any top-down analysis. You are killing yourself and you keep on losing money if you are trading like this. While the last one, most new beginners are ignoring risk to reward ratio. You guys don't know the importance of risk to reward ratio. That's why you keep on losing and losing and losing money. If you fall into these 4 parts of categories, then just have it in the back of your mind that you are not trading, you are gambling with your money. That is why you keep losing and losing. Here is what changed everything for me. I simplified my trading into this formula and I become profitable. First of all, I choose one particular pair and I choose one particular section and I also choose one particular setup. You understand? Now, for example, the particular pair I choose is GPUSD, and for me to choose GPUSD, it will make me to be focused in the market and understand that particular market, how it moves, how it reacts to news, and so many other things. Now, going to the section part, I choose London section because GPUSD is the Great Britain's pounds, and they normally move during the London section. So London section, I'm normally for anything GBP pairs, GPUSD, GBJPY are good to trade during the London section during that time. While anything USD pairs, USD CAD, USDJPY are good to trade during New York section during the US time. You understand? So this one is during the London time and the other one are during the US time. So I choose London section. You understand? Because of this high volatility in the market, that's why I choose the London section. Now, once it comes to one particular setup, I trade with the smart money concept. This smart money concept strategy consists of about 6 things. I'm going to list them in this video. You understand? That's why I say watch the video to the end. They consist about six things. Now, these 6 things put together make up one particular setup. You understand? If you see 4 and you not see the remaining 2, you back out from that particular setup. But if the 6 of them are present in the particular setup, they know that the particular setup is an A+ setup. You understand? So this way, I was able to eliminate confusion and improve my timing and also improve my trading career. And since then, I started trading with intentions, not purpose, and not emotions. So guys, now this is a live example and these are the 6 things I told you guys that I will be looking out for if I am to trade any setup. As an SMC trader, these are the 6 things I'm looking out for. Now, first of all, this is a live example chart, and no, this is not a chart here, this is just an illustration. So we'll be looking at the market structure. Now, this market structure is just like the overall bias of the market, because anytime I want to trade in the morning, if I want to analyze the market, I first of all know where the market is heading to, where are we going and where are we coming from. Now, if the market is going somewhere, then I will be able to mark out the overall bias of the market, either it's bullish or bearish. If we are going up, I know say yes, the overall bias of the market is in a bullish form. So therefore, I'll be looking out for a sell setups. You understand that? So, but if it is bearish, then I'll be looking out for a No, I made a mistake. If we're bullish, I'm looking at for a buy setups. But if we are bearish, then I'm looking at for a sell setups. You understand that, guys? So now this is a break of structure. Now, after finding out that the overall bias of the market is in a bullish form, market need to be breaking structure to the upside and continue going in that bullish form. Then I'll mark out all my break of structures, the structures that market is breaking while going up. I'll mark everything out. You understand? And why market is breaking structure to the upside, market is creating what we call order blocks. Order block is the last candlestick that form before the aggressive candlestick that caused the impulsive move, which caused the break of structure to happen. That is our order block. I will show you that in our illustration and in our rate chart example. After that order block, we'll look for our fair value gap, because an order block without a fair value gap is invalid. So therefore, we look out for our fair value gap. We mark our fair value gap out, and we look for liquidity, because if price does not sweep any liquidity, you will be the liquidity. Liquidity matters in this market. Price seeks for liquidity. That's why market is moving. Without liquidity, there will be no move. So in other case, liquidity means money. Without money, nothing. And after that, my exit plan. Before I strike in my buy or my sell, I need to know my exit plan. How am I going to escape from this market if the market go against me? Or how am I going to escape from this market if the market also is in my profit or is going my way? Because market might be going your way 2 to 3 or 10 to 20 pips and then reverse and take you out. But if you have a exit plan, you can be able to know how to escape from that particular scenario. Now I will show you guys a live example marking out everything that I just said here. Now guys, looking at this particular example now, you can see I just implement all the 6 things that I listed out while trading. Now this particular setup is an A+ setup because everything was implemented for me to be able to craft out this particular setup. First of all, our structural bias is a bearish movement, because as you can see, this was our last break of structure to the upside. Before that, you can see our change of character over here and another break of structure showing that yes, price is already moving down. You can see price is already breaking structure, higher highs, higher lows, going to the downside. You can understand that, guys. So therefore, we'll be looking out for a sell position to join the market or to join the trend. Now after seeing this last break of structure, this is the change of character, this is a break of structure. After seeing this is the new break of structure. Now after marking out this break of structure, the next thing that is in line is to mark out our order block. Remember, the first one, structural bias, bearish. The second one, break of structure. This is it here. The third one, order block. This is our order block here. This is our order block because this is the last bullish candlestick. This is the last bullish candlestick before this bearish one came out and gave this very long impulsive move that causes this break of structure. This is our order block here, and to back it up, this is our fair value gap here. You can see our fair value gap here and mark that out, and you see we're already complete. Now what we need is our imbalance. Now this is our imbalance here. You can see this is our fair value our liquidity. This is our liquidity here, guys. From here, all these are liquidity. The price will sweep to the upside. All these are liquidity. All these are liquidity. The price will sweep to the upside. After price have taken out all the liquidity to the upside, price tapped into our order block and dished out a very massive 1:3 risk to reward ratio. Now our exit plan was, if price should take us to this low here, we will move out from the market. Fair. Now, due to my strict risk to reward ratio, which is always 1:3, I'm not greedy. Once price, this is a 1:3.5. You understand? But based on my exit plan, this is the lowest low already. So I need to put my stop loss at my take profit at the lowest low. Why? My stop loss will be at the highest high, which is here. above it a little. You can see it now. That is where my stop loss is, and this is where my take profit is. You understand? I would have done something like 6 is 1:3. Yes, this is it. Yeah, bam, 1:3. If you do something like this, you are seeing a safer side. But here is too close for this particular place. You understand that, guys? So to be realistic, price is going to reach here. You understand? Price is going to reach this particular place. That's why I set it to this place, following my exit plan. But assuming, now listen, guys, assuming this particular low is around something like here, and you can see this is never up to 1:2 or 1:3. I will not consider this as a greater higher probability trade. Instead, I would rather go down to the 5-minute time frame to be able to catch 1:3 in this particular setup. You understand that? You understand that? So guys, if you notice, I wasn't chasing the market. I waited for my setup to form, and once I get that particular setup, I knock it a straight 1:3 risk to reward ratio without any mistake. Now guys, this is a bullish example of my setup formation. This is a bullish example. Now, when looking at it now, okay, this is our exit point. Now, if you're looking at it now, our overall bias here is bullish because we are moving up and up, breaking structure. Look at it, we are coming from up. We are coming from up. This is our last thing of cracked over here, and we are going up, breaking structures to the upside, breaking structures to the upside. So therefore, we cut this particular structure because it has all the components that we need. That's why this particular setup is a A+ setup. Now, look at our break of structure here, and this is our FVG, our fair value gap, aligning with our order block over this particular place. Now, this is our liquidity, which price did what? Price swept it and tapped into our order blocks through fair value gap before dishing to our take profit. Now, this is our exit plan because this was where I was supposed to put my stop loss. But if I put my stop loss below that particular side, it will be 5 pips stop loss and no breathing space for the market. So therefore, I need to shift it below that my exit plan, something like here. Yes, my stop loss should be here and my TP should be at this particular place, exactly here. As easy as that. This is the bullish setup. You can see how clean it is. If your setup does not look like this, then you are doing a mistake. You need to be seeing something like this every time in the market. Every time in the market, something like this need to be replicating himself, cloning himself every time. This particular example, if you see break of structure, everything without FVG, run away. And if you see everything both FVG without order block, run away. And if it's even though you see everything without liquidity, please run away from the market. But once you see the break of structure, FVG, order block, liquidity, don't waste your time stacking more position into the market because it's an A+ setup. Now let's talk about the risk management, which is also the money saver. Recently, I found out that most traders lose money not because their strategy is bad, but because their risk management is worse. You guys don't know how to manage risks in this forex industry. So therefore, I'm going to tell you guys my 5 plan in which I use to manage my risks properly. These 5 plans also help me in being profitable in the market. So first of all, we have this may also be seen as a rules, you understand, a rules or a plan. But all this particular scenario will guide you and help you once it comes to risk management. So firstly, never trade or never risk more than 1 to 2% of your account per trade. For example, you have $100 in your account and you want to trade, you say a setup on GPUSD. Never risk more than 1 to 2% of it. If you want to risk patapata 2% maximum, and 2% of $2% of $100 is $2. If you're risking $2, you can get a 1:5 or 1:4 risk to reward ratio. If you have a 1:5 risk to reward ratio, that means you're in a profit of $10. Then, if you're risking next time, you cannot risk your profits. Just start to scale up. You can risk half of your profit. Okay, next time let me risk $5. The main point here is not for you to be profitable very fast. It's for you to last in the market, last enough in the market. Those people telling that they've been trading for 3, 4, or 5 years, they lasted that particular years. Can you last up to 3 or 5 or 4 or 5 years without blowing account? Can you last like that? Can you last like that? So you need to plan your risks properly, very well. You understand? So always use stop loss. That's number 2. Always use your stop loss. No matter what's in the market, use your stop loss. And the third one, don't add to losing trade. If you're losing, do not stack more position to add to it. You will lose more and you will blow the account. The fourth one, focus on your risk to reward ratio. Your risk to reward ratio matters a lot. A minimum of 1:2, and a maximum of 1:4 or 1:5. Anything beyond that, you are greedy. So greedy does not mean you see profit and you refuse to close the profit. That does not even define greediness. You have a plan, you have a target. Follow the price bomber to bomber. Keep on modifying your stop loss and following the price bomber to bomber, bomber to bomber. You understand that, guys? But make sure that your risk to reward ratio is 1:5 maximum. It can be realistic for price to reach 1:5 than for price to reach 1:10 or 1:20. You understand that, guys? So work on your risk to reward ratio for you to be very perfect in that. And again, journal everything. The fifth one, journal everything, both your lose, both your win. Journal everything. I take journals of everything, both my lose and win. I journal everything down. You understand? Now, example of everything is that if I take 10 trade, for example, now if I take 10 trade and I'm risking 1% and I win only 4, and each of them has at least 2.5, 1:2.5 risk to reward ratio, I'm still profitable. I am still big profitable. Now imagine I take 10 trade, risking 1%, and I win only 4, and I'm having 1:5 risk to reward ratio. You can see how profitable I am. So the main point is for you to last in the market, no matter how much you lose. You can take 10 trade and lose 8, but if you have a good risk to reward ratio, that 2 profits will cover for the loss and even make you more profitable. You understand that, guys? So even with a solid setup and a good risk management, your emotions can still mess everything up. You have to keep your emotions and your mindset in place for you to be able to trade. We don't trade based on emotions here. We trade based on facts, based on what we see and not what we think. You understand? So now here are some few tips that will help you in your trading journey. To help you stick to them, and I think you'll be more profitable as times goes on. You understand? So first of all is stick to your plan, guys. Stick to your plan and do not trade based on your feelings. Do not trade based on you think that price will move up, or based on you having this feeling that yes, something will happen and something will not happen. Don't trade based on that. You understand? Just stick to your plan. Craft out a plan and stick to that particular plan. The second one, take a break between trades. If you trade today, for example, now you trade today, stop loss. You trade tomorrow, stop loss. You trade next tomorrow, stop loss. Take a break. Just go and rest. Go and do anything. You must not trade every day. Go and relax. Go and play. Just go do anything. You understand? Don't focus on the market to avoid messing up your psychology. After any profit, you calm yourself down. Don't be over joyful because of you caught a winning trade. No. After any profit, calm down. After any loss, you also calm yourself down. By this doing, you are growing. The third one, accept losses as part of the game. No matter what, always accept your loss. Loss is also part of the system. If you're always winning no loss, then it's not complete. There must be a losing streak for you to have a winning streak. You understand? So you need to lose for you to win. The fourth one that I'm going to tell you guys is confidence comes from consistency. If you are doing something back to back to back to back, the main point is nobody's asking you how much you're making, but the main question is, are you always showing up every day? Show up every day. Be consistent. Don't blow that account, because once you blow your account, you're gone. Don't blow that account. Keep on trading that account every day. Safeguard that particular account, and that account will surprise you one day. You understand that, guys? So don't chase the market, let the market come to you. If you are tired of losing every trade or blowing your account or overthinking, try this simple structure. It will help you a lot. One pair, one section, one setup, risk 1% of your account, aim for at least 1:2 risk to reward ratio, and track everything. What I mean by track everything, I mean journal everything. This is going to help you a lot in this trading industry. Now, like this video if this video give you value, and comment what setup you use, and subscribe if you haven't subscribed to this channel. Subscribe to this channel, and if you are ready to trade with clarity, comment below, and I will see you guys in the next video. See you guys next time.